How much does a big rig truck cost? As the economy has weakened due to market conditions including diesel gas reaching $5 or more per gallon in certain states, the route of conventional financing has changed as we know it. The lender has acquired another problem that makes their equation a little more complicated. In the past year, as the price of food has gone up, the real estate markets have taken a toll for the worse, and other world factors have caused the banks to be more unstable. The trucking industry has become more volatile. As the increase of defaults on the payments of over-the-road trucks, semis etc. have risen to all-time highs, the lenders have been taking back these trucks by the droves that are earmarked as repossessions. This has caused a problem with normal lending practices and trying to balance it with a non-producing income portfolio. If these lenders don't act swiftly and prudently, the combination of these two types of portfolios can be devastating to the lender's bottom line. A third factor to consider is the off-lease truck. These trucks are being returned to the lender and they must act accordingly with this third factor. The lender can either advertise their off-lease and repo inventories through their internal sales force trade journals such as Truck Paper, Truck Trader etc., or utilize outside professionals such as brokers to move their inventories as quick as possible. Sometimes, as these inventories either sit or whatever reasons are moving, the lender will put these items up for auction. At the present time, the lenders have two different types of financing portfolios to consider and must act accordingly. Normal lending on new business deals still requires stringent lending practices based upon the credit markets and the risk-reward factors lenders perceive out there in the financial markets. The second type of portfolio for the off-lease and repos require possibly a more lenient approach to liquidating their inventories prudently and recreating the income stream for the lenders. This will be discussed below. These favorable financial arrangements by the lender has stimulated the buyer's wants and needs to either enter the trucking industry as an owner-operator and or possibly an expansion of an existing business. First-time buyers whom were locked out of this market in the past now has a unique opportunity to earn more revenue by acquiring a truck for himself. A $50,000 over-the-road truck might require as little as $1,400 down to commence the financial obligation. Other lenders that might have required up to 30% down in the past might accept as little as 10% to acquire one of their repos and or off leases. Additionally, some lenders may offer favorable monthly payment terms versus standard lending to acquire their off-lease and repos versus the buyer looking to acquire a truck at a dealership.